This is Retire Hour.
Welcome into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape that is retirement. Hi, I'm your host, Matt Goolsby. We've got a full show coming up for you later. We'll have Mark Benefill in talking about how Medicare supplements, some of them we've been seeing rising in costs 12 to 14%. You won't want to miss what Mark has to talk about here later if you're on a Medicare supplement. And of course, Alex Robinson, he'll be talking about grief brain. I've never heard of that, so we'll want to make sure we pay attention on the second half of the show, talking with Alex Robinson about what grief brain is. And then, of course, Joshua Sikora, our lead tax advisor, he'll be talking more about the tax changes that are in this one big beautiful bill, or as he calls it, OB3. But the first half of the show, we've got the advisor portion here, and of course, my monologue. And I want to talk to you guys about this past week. I had multiple 15-minute conversations with you guys out there. I appreciate you doing that. But this 15-minute intro call that I had with a gentleman whose situation might sound familiar. He and his wife, they're approaching Medicare eligibility. His birthday is coming up soon, putting him in that 90-day window before turning 65, and his friends told him, you have to go sign up now or you'll get penalized. But here's the twist. His wife, she turns 65 next year, but it's not until the end of May 2026. Normally, Medicare eligibility begins that first day you turn 65 or the first month you turn 65. But there's a twist here. There's a wrinkle. And I'm talking to everyone out there if you have a birthday on the first of the month. So if you're born on the first day of the month, eligibility starts the month before. So in her case, if she was born on May 1st, 1961, her Medicare eligibility would actually be April 2026. And a lot of people don't know that. So again, if you have that birthday in the first of the month, you're really turning 65 the month before in the eyes of Social Security and Medicare. So I'm sure you can see why people get so confused. And that's where our healthcare advisors come in. I told him, I said, if you're still covered under your employer's plan, you may not need to sign up right away. And you might avoid penalties altogether. But it's important to confirm that with our healthcare professional. Don't take it from me. I'm a financial advisor. And that's why we offer these introductory calls. Because sometimes what you hear at the coffee shop or with your buddies, it's not the whole story. Then he mentioned, as he manages his own investments, his son is a financial professional, and said, don't pay for your investment advice, especially if it's just a buy and hold strategy. And you know what? I completely agree, and I get that. But when we talked about how we bundle all the things here that impact you in retirement, your health care, your taxes, your estate plan, and the investment planning, he started to see the value of having that coordinated team. We also discovered his estate plan hadn't been reviewed or hadn't even been updated since his kids were still living at home. Big, big red flag. And life changes, the laws change, and your estate plan, it needs to keep up. And then we kind of got around to talking about taxes. He'd never done tax planning, and he wondered how this one big beautiful bill, it might impact him from a tax scenario or tax situation. The more we talked, the more he realized, we've got some important decisions to make before year's end. And that's the power of a 15-minute introductory call. It's not a sales pitch, it's a conversation. And sometimes it's a wake-up call that you need to take action and you're missing something in your plan. So if you've got some questions, or maybe you just want to learn more, you can reach out and schedule that 15-minute introductory call with us by calling us and scheduling it at 833-44-CORE4. That's 833-442-6734. Or you can go to our new website at retirementhelp.com. And you can schedule it right there. You can see the availability and get that 15-minute intro call scheduled. Or again, you can call that phone number at 833-44-CORE4. That's 833-442-6734, or go to retirementhelp.com. And these 15-minute calls, like I said, I had 4 or 5 last week. I can already see that I have 2 or 3 more again next week. These are where we just have a conversation with you to get an idea what's going on in your situation. Maybe it's just some questions you have. Maybe you've attended one of our in-person classes and you're like, I came to learn about Social Security, and there was this one specific topic that I wanted to get an answer on, but maybe it wasn't covered in the class, because really some of those classes, they don't get into the specifics of your situation. They just hit it at a high level and talk about the different risks that you can maybe hit out there in retirement, or you're unaware of. But these 15-minute calls, it's really just about, again, having that conversation, not being high pressure, and essentially you've got nothing to lose and a whole lot to gain. So we'll have Danny Goolsby here back after the break talking about the history of Social Security cost of living adjustments. It's about that time of year where we start figuring out what the cost of living adjustment is going to be, and do you have a plan to keep pace with inflation? And of course, Larry Clefcorn, he'll be rounding out the advisor segment here, talking about tax loss harvesting on those monies that are not in your retirement account. There's always tax consequences there. You got to be aware of that. And of course, like I said, after the break, we'll have Mark Benefield talking about Medicare supplements, Alex Robinson talking about grief brain, and then Joshua Sikora making sure we're learning all that's in that one big beautiful bill and how it impacts the people we help. You won't want to miss that. So stay tuned. We'll be right back with this right after this. Welcome back into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape that is retirement. And it's this time of year we start figuring out, okay, believe it or not, we're halfway through the year, and we're starting to look at, open enrollment that's coming up here in October for Medicare, and then we've got tax planning in the fourth quarter. But there's also something else that goes on about this time of year. We start figuring out what the COLA is going to be. And I'm not talking about like a soda pop COLA. I'm talking about the cost of living adjustment, COLA, and that's for Social Security. And we've got Danny Goolsby here with Market Advisor Group. Talk more about this COLA here, this soda pop.
Yeah, so the Social Security cost of living adjustment actually began in 1975. And so it was something that tried to help keep up with the expenses with everything else in the world going up as it happens. And so I'm going to read a bit of an article here from the Motley Fool folks that they talk about this, just to cite some sources before we get going on my topic here. So they wrote an article back in I don't know, last month I think it was, that said the 10-year average Social Security cost of living adjustment was 3.2%. And they said that some people are feeling shortchanged by that COLA because things are costing more than what Social Security was able to give them. For example, they announced that COLA in the fall of the year, in October, I believe it is, when they announced that quarter for the next year. But a lot of times people think that that's based on some metric that they are looking at the full year. And what that really is based on, again, according to this article, this COLA is based on changes in the Consumer Price Index for urban wage earners and clerical workers, otherwise known as CPIW. And what they're doing is they're checking on the spending habits of workers. So to elaborate a little further on that, the CPIW, they're going to look at the third quarter for that metric, and they're going to compare that, so the third quarter is July through September. They're going to look at that metric for the current year versus last year, and they're going to look at that and say, well, what they deem to be what the spending habits are for people who are receiving Social Security, and that's how they announce what the Social Security cost of living adjustment will be. So in other words, they're not even covering the other 9 months of the year. They're only covering 3 months of the year.
So that's July, August, September?
Right. Yes, sir. And so, again, in 2024, the cost of living adjustment was 3.2%. But if you look at that, it's like, okay, well, I'm glad Uncle Sam's looking out after me and that he's giving me this cost of living adjustment because I'm on a fixed income now that I'm retired. But if you go back and look at some of the things that have cost with Medicare, so you look at the cost of Medicare Part B in 2023 for the entry-level person, well, what a lot of people will see their cost in 2023 for Part B was $164.90. Well, in 2024, it was $174.70. So that's an increase of 5.5%. Well, 5.5%, I didn't get straight A's in math, but 5.5 is bigger than 3.2, what Uncle Sam was giving us as a cost of living adjustment. Taking that further, the cost of living adjustment for the current year of 2025 for Part B Medicare recipients is $185 this year. So that's up 5.8% from last year's 5.5. And again, I tell you that the Social Security cost of living adjustment is 3.2 for 2024. They're getting ready to announce that again coming up in October this year for the year 2026. Where I'm going with all of this, or why is this important, is because things as we get older, things cost more, and if you're on a fixed income in retirement, how do you take care of that? How do you adjust for that? If Uncle Sam is giving you something less than what really things are going up, I've had a lot of people tell me when sitting down and visiting with them in the conference room that, I got my cost of living adjustment from Uncle Sam, but my Medicare premium or things that I'm paying are going up much faster than what Uncle Sam is giving me for the cost of living for Social Security. In other words, they're not keeping pace. And this article had an interesting twist to it, and that was they were saying that they're glad, the authors of this author, they were saying if Social Security would have gone further in 2024 and given a higher cost of living adjustment, then that would just have accelerated how fast Social Security's demise would have happened. And if you think back in the news, the Social Security is scheduled to have a depletion or be depleted where they're not being able to pay 100% of benefits to everyone who's receiving them by the year 2034. And the author of this article said that, it's good that they only got a 3.2% cost of living adjustment, because if Social Security would have given a bigger cost of living adjustment, more truer with reality of what things are costing us.
Runs out of money faster?
It runs out of money faster, exactly so. So it's almost like, I won't use the word Ponzi, but that's what comes to mind.
All right, hang on. Let's take it back here. Let's take off our tinfoil hats for a second. So the Senior Citizens League, they're a nonprofit, nonpartisan advocacy organization. They're one of a couple of different organizations that start looking at these inflation numbers in July, August, September, and thinking, hey, we're forecasting it to be this. And they're forecasting somewhere between a 2.5 to 2.7% COLA here for next year. But of course, like you mentioned, that's not going to get officially announced until October-ish. That's what has historically happened. But
right.
2.5 to 2.7%, that's not a very big increase.
It's not. And again, so the increase is not going to cover the cost of your Medicare Part B difference a lot of times. And then by the way, you probably got in a bad habit of eating and wanting to get groceries and gasoline for the car and car insurance. I opened a bill this morning, or not this morning, but earlier this week, and it was a bill from my county treasurer saying my property taxes are going up. And
2.5%, right?
Yes, sir.
A joke.
Yeah, well,
more like
maybe
25%. No, I'm kidding.
Well, but things are going up every year, and because they go up every year, where this boils down to people that we talk to is see this coming. And if you see this coming, you have a little bit better reaction time, or if you can plan for this. So, a lot of times I sat down and talked with Taylor Bevan out of our office out in West Wichita yesterday about a client who's coming in this evening to file for Social Security benefits to begin. And Taylor has a certification called the National Social Security Analyst, or NSSA.
Wrong.
Okay.
RSSA, Registered Social Security Analyst.
Thank you. So she has that certificate, and essentially what that says is that she's an expert in things Social Security. Albert Einstein said of the American tax code way back in the 1950s, said that was the hardest thing for him to understand was the American tax code. Well, truly, the Social Security understanding rules and regs, how the COLAs work, when's the best time to file. Matt, I think you said in the first block today that you said, if you're born on the first day of the month, then you have something different that could happen to you.
It's a special birthday.
So you have all these different kinds of things that can happen. My question for the audience is how do you know which way to turn? Did you know you got that special benefit, as Matt talked about in the block number 1? Did you know, as far as Social Security, how are you going to keep up with the cost of living adjustments? And that goes in with the people who are in our staff that are understanding all things Social Security, but it also goes into making a plan. Plans, you need to be able to weather a plan. When Uncle Sam is shortchanging you because he says the cost of living is something less than you may be experiencing, then how do you adjust for that? And the answer is you have to have a plan.
So if you're thinking out there and you're listening, hey, I have no idea what's going on out there, or maybe you have specific questions about Social Security for your situation. Well, it all starts with that 15-minute introductory call, and you can do that by scheduling and calling at 833-44-CORE4. That's 833, the number 44, the word core for CORE, 4. That's our Core 4 process where we take a look at the financial gaps in your plan, the estate planning gaps, the tax gaps, and of course the healthcare gaps as well. And if you don't have someone that can help you navigate all those things, again, schedule that 15-minute phone call with us. We'd love to have a conversation with you and learn more. Well, stay tuned. We'll be right back with Larry Clefcorn talking about tax loss harvesting right after this. Stay tuned. Back into Retire Hour, the weekly show that helps you stay up to date on all things retirement, not just the investment side as so many other shows out there do. I kind of take a little bit of pride on that we cover a lot more areas than those other shows.
Yes.
Believe it or not, there are other shows on the radio besides us. Did you know that?
Wow.
So we got Larry Clefcorn here, an advisor with Market Advisor Group Wichita. And how is a financial advisor speaking about taxes? Because I know my compliance officer always says, you're not licensed to give tax advice.
That's right.
So how can you be having a conversation about tax loss harvesting on non-retirement dollars? Tell us what's going on here.
Well, I address the actual investment side of it, okay? And then the other side of it, the actual nitty-gritty of the tax part, we, of course, have some CPAs in the building, and they can come in and interpret it for us. So what we're talking about here is these would be primarily for non-qualified accounts, and what they're trying to do is lessen your capital gain that you may have to pay on holdings that you have. Man, I can't tell you how many clients that are of the high net worth area that all say the same thing is they've got a bunch of NVIDIA. Man, has it done great, and probably wasn't supposed to mention
That's
that
all right.
name,
Well, not me. If that's a quote, that's a quote.
yeah, it is. And so the idea being that there is some software that can run in those accounts in the background. There are two types. One of them's for free. There isn't a fee for it. And then the other one, there is a fee for. So, and this new one that has the fee, they're still getting familiar with it. So it runs and it looks for opportunity. So then our CPA, we can have him look into it and see what the data says, see what the suggestions are, see if he concurs, and then he will actually tell us, me, the advisor, okay, I would sell that lot and that lot. And folks, when we're talking about lots, what that means is these are possibly people who bought positions in a stock, and then they bought some more later, and then bought some more later. Each buy
is going to have a different price point that
yes.
they come into, typically. Not
Right.
all, I mean, I guess typically, we'll say it
Yes.
that way. But you might sell that lot. You might turn around and buy it right again just to reset the cost basis.
Yeah, they could.
There's an opportunity for that.
Yes.
But a lot of times, this is helping our clients when they get this tax planning. Well, you and I were just talking about something not related to this last night, but I said, you know what, wouldn't it be better if I had the numbers to make an educated decision on? And you're like, yep, you're right.
Absolutely.
And this helps our clients make an educated decision when they can see things instead of being reactive and waiting till they get their tax documents in January or February and then going to their tax person. It's recording ancient history at that point. It's not making a decision in the moment. This allows us to make that decision in the moment to help, again, clients get better clarity in their tax situation.
And it runs throughout the year because as the stock market ebb and flows, so do those prices in those positions that people have, and an opportunity may present itself that may present itself in March, for instance, and if you don't take advantage of it then, a month or two later, price may have changed and it's not advantageous anymore.
And this is, again, a scenario I'll talk about specifically in my tax class for if someone's not meeting with their tax person and their investment person together.
Right.
It's really the retirees or the individual's responsibility to relay all those informations between the two. And I find a lot of people don't do that because they don't know what they need to relay. And number two, they're not aware of things until it's already cost them money.
That's right. And another thing I might mention is I've not had but maybe one client over all the years, maybe two, that has brought that topic up to me. I am introducing to them a strategy and a plan to help them because I have people in the building qualified to help me do it.
And when you said qualified, that reminds me, let's back up here. You said the word non-qualified. What's non-qualified money?
Okay, so non-qualified is meaning that it's not retirement money. Retirement money is in the Internal Revenue Code called qualified retirement money. So these would be monies that, for instance, might have come out of your savings account, or it's like savings account money. You've already paid taxes on it. Now you just have to pay taxes on the growth, or choose something that will defer those taxes till later, or so forth.
So this is money that's typically not in your IRA, your 401k.
Right.
This would be after-tax money in a sense where you're only, like you said, paying taxes on those gains.
Yeah.
And this is actually those types of retirement accounts that have, in my opinion, I don't want to say more tax gotchas, but different tax gotchas than the IRAs and the 401ks.
That's right. Because with the IRAs, 401ks, with Roths, those can be transferred to another institution and as a non-taxable event, as long as it's done right.
I was going to say, if you do it the right way, right,
Yes.
with those rollovers. But if you guys are listening out there to this and you're thinking, man, non-qualified, qualified, I don't know, which kind of money do I have? Maybe you have both.
That'd be the ideal.
Right? Because the more tax diversification you can have, the more you can control taxes in the future. And a lot of people I come across, they may have only saved in their 401k or the IRA. So every time they're going to take a withdrawal, they're going to push themselves up higher the tax bracket. And if some of these terminologies you're unfamiliar with, that's all right. They're technical terms. Schedule a 15-minute call with us and start a conversation. And during that conversation, you can ask some of these questions and get more educated about your situation. And you can do that by calling 833-44-CORE4. That's 833-44-CORE4, or you can go on over to our website at retirementhelp.com. We'll be right back. Welcome back into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape that is retirement. I'm Matt Goolsby, and we were talking with our advisors in the first part of this show, like we always do, about things are getting more expensive. And Danny was talking about potentially what it looks like the new cost of living adjustment will be for next year on Social Security. And while they don't officially announce that until, October-ish, sometimes in the fall, they're already forecasting that to be, and I say they, a lot of groups, a lot of nonpartisan, nonprofit groups that track this stuff, they're forecasting it to be an increase of 2.5% to 2.7%. And I've got Mark Benefill here with Market Medicare Advisors. You're here to talk to us about, you're seeing some Medicare supplement. They're increasing more than 2.5% to 2.7%.
Yeah. Oh, yes. A lot more than that. We actually started seeing this trend prior to the election in 2024. where we saw some supplement companies have large increases as much as 10, 12, even 14%. And that's continued into 2025. So we've had some people kind of righting the ship in 2024 with a 10% increase and then come out in 2025 with a 12% increase. Do the math, that's still about 22%. We don't necessarily see that trend stopping at all. There's a various number of reasons for that. A lot of it, there's a thing called the COVID bounce. I've heard it put as, and basically there was a lot of pent up demand for medical care during COVID. And, some states, were closed way longer than we were here in Kansas. And there were a lot of people that didn't go to the doctor. And so once all those states were open and all those things happened and everybody went to the doctor and those procedures started following through, whether it be surgeries or other types of care, they hit those supplement companies very, very hard. And they've had to pass those costs along.
So if you have, I was just doing some quick math here, you're seeing me figure, and that's interesting, the COVID bounce. I've not heard that. I might have got to look into that.
I may have made that up, but
okay. Well,
it's an actual thing that I've heard. It's kind of an industry Medicare kind of Facebook group kind of a term.
Or maybe you just breathed it into life. So if let's say on average for easy math, someone's got $2,000 in Social Security benefit. Well, a 2.5% cost of living adjustment, that's going to be $50. Of course, they're going to increase your Part B premium by probably call it $20 at least is what it's looking like. So that eats that away. But then if your Medicare supplement, again, for easy math, say you're paying $200 a month for that supplement, it goes up 12%. That's $24. Between the increase of the cost of Part B going up and between the increase of your Medicare supplement going up, your cost of living adjustment was just vaporized between those two things. Did you follow along with all those math?
Yeah. Those
sure.
Costs aren't going down. No, for sure. Your money's coming up a little bit, and costs are outpacing the rate of what those increases might be, for sure.
So if people are on a Medicare supplement, what are they to do? Are they just to take it and pay the increase? I mean, do they have any options?
It depends on the situation. There are a lot of different states have different rules. For instance, here in Kansas, we can rewrite a supplement. We can petition and go to another company, make a new application. And if somebody is in fairly decent health, doesn't have a lot of issues, they may be able to make it through the medical underwriting situation, answer 20-25 questions, go through some history background of their health, and they may qualify for a new supplement with a different company at a lower rate. That's possible. In a state like Missouri, they have a anniversary date that on the month of your birthday, you can actually change one supplement to another within that 30-day window, and with no underwriting at all. And so different states, I know people listen to us from different parts of the country, have different rules. And so your local Medicare advisor would probably be best to explain that to you, but in your state. But here in Kansas, we don't have to wait until open enrollment, which is in October. We don't have to wait till then. We can actually rewrite or petition for a new application at any time that we want to.
Isn't that weird?
Throughout the year.
I mean, like you said, we've got listeners in different markets, Missouri and Kansas. And we've got an office in Kansas City, Missouri, so we've got to deal with both sides of the line. Mm-hmm. Interesting that Missouri looks at it a little differently than Kansas. But back to something you said there, I think a lot of people, because of the annual enrollment period, they think that's the only time of the year they can do anything.
Right.
And it's if they're on a Medicare or if they're on a Medicare Advantage plan, that is true, right?
That is correct.
But if they want to switch their prescription drug plan, that's the annual enrollment period too.
Right.
But they can do something about their Medicare supplements if it's going up in costs.
Correct.
And you guys do that year round.
We do, and there are some circumstances here in Kansas because there is a little known federal rule or Medicare rule that deals with a state that has a discount pharmaceutical program. There are also sometimes things that we can do outside of open enrollment one time a year to change their drug plan as well under certain circumstances, and we've had to do that before too. And so if maybe someone halfway through the year comes up with an affliction or some disease or some concern, they need a new medication. That medication isn't handled well by their current provider. It does make sense to look and see if we can utilize some of those lesser known special enrollment periods to make some changes.
So back to the beginning of the show in my monologue, I know you weren't listening. That's okay. You had more important things to do. You were off doing your own thing. I was talking about how I had a call with someone this past week one of these 15-minute introductory calls. He had heard from his buddies, well, he's got to sign up for Medicare when he turns 65 in January, February, something like that. And he was coming up on his 90-day window, and he was worried that he had to do something. And I'm like, well, are you still going to be working? Yes. Are you still going to be covered under your group plan at work? Yes. My wife doesn't turn 65 until May next year. Well, found out that her birthday was actually May 1st. Now, that doesn't mean she becomes Medicare eligible in May of next year, right?
Right.
It's April. And these are all the little nuances, and you're sitting here talking with me about, well, Missouri is this, and Kansas is this. And if I didn't have you guys to pull in the conference room and continue this conversation, I would be way out of my depth on helping people, because there's just so many little nuances with Medicare.
And they change every year.
No.
I mean, we get a whole new packet of changes, and every year as well. We have to go back and get reevaluated. We have to go get certification from every single carrier that we have every year, and their plans change and how they're applied change. And I don't know how people keep up on it either.
And you do this for a living.
Right. And so, during the time when we're not as busy, all our agents are in there doing education, doing certifications, doing research. And while we are still busy, don't get me wrong, not like we are during the open enrollment period, when we're just back to back to back to back, we're still seeing people every day. But there's a lot of education that goes into, and how Johnny from the plant thinks he knows the rules. I'm not really sure, because I know he doesn't spend as much time as we do. Not to say that he's ignorant. Sometimes they don't know, and they're not up to speed on what the changes are.
Well, and that's where it starts. Maybe you have heard from your friends, well, you need to do this, or man, watch out for that. You don't want to have that. There's all these unknowns that can be out there. And like Mark said, when you learn them, they sometimes change. If you don't have someone you can rely on to get straight answers about your special circumstance, reach out and give us a 15-minute introductory call today. You can schedule that introductory call by calling 833-44-CORE4. That's 833-442-6734. Or you can go over to retirementhelp.com and schedule that 15-minute phone call with us just to get answers about your situation, or begin this process of working with this complete retirement team. Speaking of complete retirement team, we'll be back with one of our estate planning attorneys right after this break, talking about grief brain. Stay tuned. You won't want to miss this. Welcome back into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape of retirement. And we've got Alex Robinson in here, an attorney with Eidelman Law Firm. And I've been teasing the whole show that we're going to talk about this grief brain. I'm going to take a guess at this before you tell me what it is. Grief brain, is that when I've spent too much time around my dad and my brain is just really, no, that's not it.
I mean, that is a part of it, right? It's about what happens when you're under stress and trauma.
Okay.
It operates very similar to pregnancy brain, which, is kind of a joking term.
Sure.
But it applies when someone that you know and care about your whole life passes away. The trauma that presents in you makes it very difficult to make good decisions, makes it very difficult to know what the next steps are, makes it very difficult for you to interact with your family the same way you did before. And I see that all the time in the probate field when people start making decisions on their own and they haven't talked with someone else. And maybe that decision isn't the best one for them. And then they turn around and everything in that probate is messed up and they need a lot of help.
So let's take a step back here. And you're using probate. You're already starting to get into those fancy terms. So grief brain is something that after you've lost a loved one, whether it's your partner or a family member or a friend, and it just clouds. I mean, you're thinking about other things.
Yeah.
You're thinking about the good times. You're thinking about how they won't be there for the future times. It's clouding your judgment and maybe not making you aware of everything you need to be made aware of. And when it comes time for probate, and that's that legal process that they recognize your will, or if you don't have a will, they divvy up your stuff. But the will needs to be filed 6 months after the date of death.
Needs to be filed within 6 months.
Excuse me,
Yeah.
within. Got an attorney here. I've got to be specific on the word. But that sometimes is something that could get overlooked by grief brain.
Yeah, absolutely. And it's the unfortunate way the world works that you shouldn't be making any big decisions within a year of someone that you really care about dying.
Besides filing that will within 6 months.
Right. And
year,
that's the
6
thing.
months.
And that's the unfortunate part, is that on the legal side, you have to act within 6 months. And so we see a lot of times people, I have a client, their kid died 35 years ago, and it took them 35 years to come in and see us because they were just so traumatized by that event. And so, it's so important for people to reach out to an attorney and reach out to someone that they know and trust and say, hey, we've got a will, we've got our estate plan set up. I'm not in a good place right now to know whether that's working, what steps I need to take, what we need to do. And so coming in and sitting down with one of us and having us look through the documents can really be helpful for them.
And I think a lot of times, especially people that are married and lose a spouse, sometimes they may think, well, I don't need to probate anything. I don't need to do anything. I'm married. Everything just goes to me. And sometimes that's the case, and sometimes that's not the case.
Yeah, absolutely. I mean, we have clients all the time who get nasty surprises where they try to go sell the house or they try to get into a bank account and they can't. And man, that shock on top of losing your partner is just devastating. And having someone there that can help with that process and walk you through what needs to happen is key, because otherwise you're just spinning in circles.
Well, and I think you kind of touched on something there that I'm going to drill deeper on. When you go to try to sell that house or maybe you have a family business that you own, and maybe half the business is still owned by your former spouse or former partner. We've had that happen or come across our desk from a gal that watches our TV show. You don't know all these particulars. And yes, while you are there in the mourning process and you are having to go through the emotions of losing that partner or that spouse, a lot can get missed.
Yeah, absolutely. And I see that all the time. I've had cases where people have had 3 generations where they just assume, hey, the house, now belongs to dad. Now the house belongs to the son. Now the house belongs here. And when they finally get ready to sell, they realize when they come in and see me, we have to do 4 or 5 probates. And that is going to be very expensive to do because no one took care of the things because they assumed they knew what was going on. And grief brain meant they didn't have the energy to go figure out if they were right or not.
And, I've never, like I said, never heard the terminology grief brain, but it makes sense because when people have those life changes that hit them out of the blue, maybe they saw it coming, maybe they didn't. Yeah. You're struck, you're in shock. You don't know who to turn to or what to do. And if you don't have a team that can help you when situations arise like this in your retirement, reach out and schedule a 15-minute introductory call with us. And you can do that by calling 833-44-CORE4, or that's 833-442-6734, or hop on over to the website at retirementhelp.com or marketadvisorgroup.com and schedule that 15-minute chat with us by phone. And again, I thank everyone out there that's listening that did that last week, and I've got still a couple more to come this week. Speaking of more to come, we've got Joshua Sikora coming right back after this break, talking about how this one big beautiful bill has all these tax changes in it. Stay tuned. We'll be right back with more. What a fitting commercial coming back in from the break. That retirementtax.com, that calculator we've built up that shows and highlights the benefits of tax planning on these retirement accounts that have not had the taxes paid on them. I'm seeing in your notes here that these tax cuts are permanent. So, I guess you and I can go on vacation now. We don't have to do any tax planning. Taxes are going to be low forever, and we'll be okay.
It'll be fine. We'll, go down to the Virgin Islands. We'll,
okay.
I don't know, do something. It'll be fine. It'll be fantastic, right?
But you have the permanent in air quotes, or the quotes around permanent.
Yeah, so I was talking with someone the other day, and they said, well, now that he made all these tax cuts permanent, there's really no need to do tax planning because why would I want to fill up my 12% bracket now when I'm going to be filling it up when I take my RMDs anyway? Why bother? I said, well, that's a great point. He made them permanent until someone else comes along and decides they need to be changed. And like you were talking about in the break, we're $2 trillion, we're trillions of dollars in debt, trillions.
Yeah, and then also we're spending $2 trillion a year more than we're taking in, and tariffs are forecast to do, I think, only like $300 billion in revenue. But there's some argument on would you count on that or not. But this deficit spending we've got going on here, I think, is the perfect example or evidence to say you need to be doing tax planning on this money you've not paid taxes on.
Yeah, it's temporarily permanent. And that's not even to mention the fact that your life circumstances will change. How many times have you and I sat down with a person and they have started off the conversation, well, I just lost my spouse X number of months ago. I don't know what's going to happen next.
You're talking about the widow's tax trap.
Yes, and it is probably one of the worst conversations we have to have, because we say, oh yeah, all that money you've been taking out of your IRAs, you have to keep doing that. Plus now you're going to be taxed heavier on it.
There's less dollars in those lower tax brackets because now they're going from married filing joint to single.
That's right.
And it's got about half the dollars in that 12% tax bracket. And normally that's when people take the money out of those pre-tax accounts, the IRAs, 401ks, when they're down a Social Security check.
And it's actually less than half, because your standard deduction gets cut in half now too, and that is getting to be a bigger and bigger number.
Leave it to my tax nerd to remind me about that.
Get you good and depressed. And it's just an awful conversation to have. If you knew that was going to happen 10 years from now, wouldn't you want to take proactive steps today to keep that from being as big of a problem as it might be?
But sometimes people don't even know they should look at this, let alone even what we're talking about.
It's a little early to talk about it, but if only they could take like a 15-minute phone call and talk about some of those issues.
It's never too early to talk about that. I've had like 4 this past week. I've got 2 more coming up. There's a lot of people, understandably so, trying to figure out how this one big beautiful bill, or OB3, as you call it. Help me, OB3. You're my only hope. No?
No, not so much.
No. But there's a lot of people that are out there confused and not understanding how this new tax law is going to impact them, and that there's some benefits if they're over the age 65 that are going to drop off here at the end of 2028.
That's right. And so it's important for people to seize that opportunity now while it exists. Yeah, if you don't do anything, maybe you'll get a bigger refund or you'll owe less, and that's fantastic. But wouldn't it be better to take that opportunity and do something intentional to affect your long-term tax situation?
Well, you'd think, but I don't think a lot of people realize they have these opportunities. And then number 2, what they should even be doing. And I mention this often. To me, the retirement system in America is broken because a retiree does not have the tax person or the tax advisor with the financial advisor at the same table. And then it makes it difficult for that retiree because they have to be the one to relay the information between the 2 people.
Right.
But they might not even know what to relay.
Right. It used to be that, you got your Social Security, you had your company pension, and you were pretty much set. But things have gotten so complicated now, between companies not doing things like that anymore, everything being shifted over to the taxpayer through a 401k instead of that company pension. And then tax law has gotten so complicated with so many loopholes and caveats that there is no longer a general situation. Everybody has their own specific situation. It does put all that responsibility back on the taxpayer, which maybe that's where it should be, I guess. But there's just so much to know. Who wants to retire to take on a part-time job understanding this? That's not the point of retiring.
I posted on my Facebook the other day, I wish school had taught me how to do taxes. And it's got a picture of Dr. Evil. It says, molten rock is called magma.
Yeah.
So this stuff is so complicated, but they didn't teach us this stuff in school. Worse yet, if they had it changed. But this stuff's so fluid. And you said, there's so many caveats. Sometimes it's, and I'm being a little facetious, but sometimes it's like, well, you owe X amount of dollars here, except for the months that have full moons and 5 Tuesdays and you're born on the 1st. There's so many nuances here that a lot of people don't figure those out until after the fact, when it's cost them a lot of money, and that's not when we want them to figure that out.
No, I went to one of these corporate development talks one time, and it says, how do you learn the things you don't know? Well, you look it up because you don't know them. How do you go find the information that you don't know?
AI.
Well, but you still have to get back to asking it the questions. You have to be able to ask it the question. And it's hard to ask questions about things you don't know about.
I have searched the internet. I have asked AI, hey, what do I not know that I need to know? And it doesn't understand the question.
I think it's still spinning, isn't it?
Yeah, the circle of death. Well, so this is, again, we're coming into tax planning season. I've already seen your calendar. I've seen my calendar. You and I don't have a whole lot of time left here in the fourth quarter, and here it is the middle of August. Why is our calendar so busy here in the fourth quarter?
Well, because we have found a set of people who see the value in seizing those opportunities while they exist. Taking a look at their situation before the year closes out to see if there's places that we can make intentional changes.
And so that's layman's term, tax planning.
Tax planning.
Meeting with your tax person before the end of the year, not when you're doing your taxes. You need to be meeting with them at both times, but if you don't have a team that you're meeting with, and if you don't know how this one big, beautiful bill impacted you for good or worse, reach out and schedule a 15-minute introductory call with us at 833-44-CORE4, or that's 833-442-6734. That's all the time we have this week. We'll see you next week.
Investment advisory services are duly offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor, and Market Investment Group LLC, an SEC-registered investment advisor. The investment advisor representatives of Market are also affiliated with and registered through Foundations Investment Advisors LLC, and may provide services on behalf of both firms to client or prospective clients where properly licensed or exempt. This show is presented by Market Investment Group LLC, an SEC-registered investment advisor that only conducts business in jurisdictions where it is properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean that the advisor has achieved a specific level of skill or ability. The firm is not engaged in the practice of law or accounting. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the show's publication and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this show is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities and other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. This is not endorsed by the U.S. government or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all your options. All client or prospective client names have been changed to protect the identities of the individuals discussed. All rights reserved.